REITs or real estate investment trusts have most certainly been taking a beating during the past 2 years or so. The Vanguard Real Estate Index, ticker symbol VNQ, makes this clear throughout a multiple number of time frames. As a significant REIT investor that owns hundreds and thousands of shares of multiple different REITs, I personally have been paying close attention to this downturn and have been taking full advantage on a lot of dips and buying opportunities. Now, due to the Fed raising interest rates and the possibility of a future severe recession ahead, a lot of these struggling REITs have made massive buying opportunities for investors that are willing to weather the storm. Now in this video, we are going to go over 5 REITs that I think as of right now are extremely undervalued and definitely might be worth looking into. Now before we go over all this, make sure to please drop a like in this video and subscribe for more content like this. So the first REIT that I want to go over that I think could be offering a massive buying opportunity trading pretty much at the 52-week range low is Extra Space Storage, or ticker symbol EXR. Now, Extra Space Storage is a company that currently stores and comprises approximately 1.7 million different units across around 184 million square feet of rentable space. And like I said a second ago, Extra Space Storage is basically trading at the low end of the 52-week range at around $126 per share. Believe it or not, in the max time frame though, Extra Space Storage is up 907%. This REIT definitely has the potential to really grow in share price, at least it has historically. And what's crazy is back of June of 2021, EXR was trading at over $200 per share, making the current share price nearly cut in half. Now because of this massive sell-off, Extra Space Storage is currently yielding 5.12%, which at least historically is one of the highest dividend yields that this REIT has seen over many years. And a safe dividend, Extra Space Storage is definitely a REIT that should be on your watch list. Now the next REIT that's definitely been beat up a lot over the last year or so is Realty Income, ticker symbol O. Now Realty Income, known as the monthly paying dividend stock, has paid uninterrupted dividends since the firm's founding and has increased its dividend every single year since going public back in 1994, making Realty Income one of the most popular REITs in the entire world and a dividend aristocrat. Now retail properties account for most of Realty Income's rental revenue, with industrial warehouses generating almost all the remainder. Also very important, all of Realty Income's properties are under long-term triple net lease agreements, which basically shifts a lot of the operating expenses from the landlord to the tenant, which is also a pretty favorable lease structure when it comes to real estate investing. But Realty Income has not gotten so much love over the last year. Year to date down 13.5%, over the last year time frame down 18.3%. Also just like EXR, trading just at the 52-week range low. Now because of all this, Realty Income is offering a 5.56% starting forward dividend yield, which is just about as high as I've ever seen Realty Income starting dividend yield, minus of course 2020. But with a very strong, solid, diversified portfolio of holdings, dividend growth, and possibly a great entry point, Realty Income should definitely be a REIT that you're looking into. The next REIT that's been beat up like crazy, that's also another one of my favorites, is AMT, or American Tower Corporation. Now, AMT is a multi-tenant communication real estate company with a portfolio of nearly 226,000 communication sites and is also basically trading at a 52-week range low. Now, AMT, just like EXR, has a little bit higher beta than that of like Realty Income. It's down around 32% on the last year time frame, and year to date down over 16%. Now, AMT is up 700% just as far as share price over the last 25 years or so. And I think for investors that have a little bit longer time horizon, AMT definitely has the potential to show some big gains over the next 1 to 5 years. But what's also crazy and awesome for dividend growth investors, because this stock has been beat up so much in price over the last year or so, it's offering a 3.48% starting forward dividend yield with 10 years dividend growth and 16.42% as far as the 5-year dividend growth rate. AMT, without a doubt, should definitely be on your radar. The next REIT that might be offering a massive buying opportunity is none other than NNN, or National Retail. National Retail's roots trace back to 1984 when the restaurant chain Golden Corral formed a REIT to acquire its properties and lease them back. The REIT was advised by National Retail predecessors and provided an investment vehicle for Golden Corral's employees. In the decades that followed, National Retail stayed true to the sale-leaseback model, in which it buys a property from an existing tenant and then rents the property back to the former under long-term triple net leases, which are very favorable leases for commercial investors. This arrangement requires tenants to pay for insurance, maintenance, utilities, and property taxes. National Retail thus serves purely as a landlord, collecting a recurring stream of high margin rent, further increasing the predictability of the business model. National Retail maintains a well-diversified portfolio, and the REIT owns over 3,500 properties, which we're going to go through here in a second. So looking a little bit deeper into this REIT's holdings, they have some very familiar top tenants across the country. Companies like 7-Eleven, Mr. Car Wash, Camping World, LA Fitness, Dave & Buster's, AMC, and others. Now, National Retail has a 99.4% occupancy, almost 3,500 properties, 30 plus tenants, 49 states, and 35.3 million square feet of property. National Retail is almost down 17% on the 1-year time frame, and year-to-date down over 17%. Now, just like the others historically, the share price has actually performed pretty well, up around 172%. But also what's crazy about National Retail is the fact that where it's trading is offering investors an almost 6% starting forward dividend yield. Now, it's very rare to get National Retail at a 5.5% starting dividend yield or anything above. And with over 32 years of dividend growth, this stock most likely will continue to pay investors more and more and more year after year, and REIT investors could potentially see some massive gains in share price on top of that. Now, the fifth and final REIT that I think is offering a massive buying opportunity that I also happen to have in my portfolio is none other than WPC or WP Carey. Now, WP Carey, named after its founder and formed in 1974, is a diversified REIT specializing in single-tenant commercial real estate with over half its properties located in the US and the most of the rest in Northern and Western Europe. WP Carey trading at $62 per share, the 52-week range being $62.68 and $85.94 as of the high. This stock is up over 195% as of all time, so this one also has had a lot of periods historically where it does trade down, but over time it's continued to trade up and to the right. Now, WPC is offering a 6.75% starting dividend yield, which is insane considering the quality of this REIT, in my opinion. Now, just like the others, WP Carey does have some dividend growth, a little bit less than some of the other names, as far as at least over the last 10 years or so, but still some dividend growth nonetheless, and consecutive quarterly dividend payouts for many, many years now. So with WPC trading below $63 per share, it could be a buying opportunity for investors that are willing to weather the storm, and most definitely, without a doubt, should be on every single investor's watch list. So there we have it. Those are 5 different REITs that I think are currently offering a massive buying opportunity. I personally would consider all the REITs that we went over in today's video a little bit of the higher end REITs. There are, of course, other REITs out there that might offer a higher starting dividend yield, but they, of course, might come along with some other risks involved. Every single REIT that we went over in this video today are REITs that I actually own or have owned in the past, and all REITs that I personally have in my watch list as of right now. If I were to stack up all these REITs personally, from my favorite to my least favorite, I'd probably go with Realty Income being number 1, National Retail being number 2, number 3 would be American Tower, 4 would be Extra Storage Space, and number 5 would be WPC. Now, down below in the comments, I want you guys to comment down below your number 1 favorite REIT that we went over in this video. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.